So on today's topic, I just want to talk about risk management because it's one of the topics that is most overlooked, and most people don't know how to really apply risk management. Okay, so what is it really? It's how much risk are you willing to accept in every trade that you take? Because I notice most of newcomers, people that are just starting out in trading, or those that have been blowing accounts for a very long time, it's the one thing that they don't grasp, and because of the desire to make quick money, they over leverage their account. Okay, so let's say, for example, this is our zone here. We've drawn our zone, the usual way we take our trades. The market breaks, retest momentum to the downside. We are taking this sell trade. Okay. We enter our sell there. Okay. Every person would definitely maybe put their stop loss there, or some would just anywhere. Okay. So now, before you even put where you put your stop loss or take profit, you have to understand one thing. Always ask yourself a question. If I look to the left, do I have enough range or move that will allow me to get a 1-to-1? Meaning, if I'm risking $10, will I be able to earn back $10, my $10 that I'm risking, without the market approaching any form of resistance or any form of obstruction? That is what that statement means. Okay, so now when you put that into perspective, you always have to calculate how much you're willing to risk. Let's say you have a $10 account. The only risk you should take is $1 per trade. Okay, so most people, what they do is they watch, people on either YouTube, Instagram, do all sorts of crazy flipping of accounts where they take a $20 accounts to 10,000, $20 accounts to 1,000, whatever the case. And they think that they can also do the same deed with their account, not understanding what those people do is this. If, let's say, they have $100, they'll fund their account with $20 each, $20 minimum. They don't fund with the whole $100. Then when they blow the first one, they fund again. They blow the second one, they fund again, until that other one gets lucky and they make money. That is the one they post on their social medias, on their Instagram, for you to be attracted, so that you can either get their mentorship and whatnot. Okay, with trading, you always have to be realistic. You can't open 5 trades with a $10 account. Reason being, when the market retraces a bit, you'll be margin called and your account will already be in negatives. So now, how do you calculate how many trades you can take? Okay, so let's assume you have a $100 account. You've managed to grow your account to $100, and now the minimum lot size. So yeah, I was saying, let's say you have a $100 account and you're only willing to risk $10 per trade that you take. So now, with your 0.001 lot size, if you enter this trade and this stop loss is giving you $1 to risk, that means you have 9 more that you can open. Okay, and that's it. You have 9 more trades that you can open. Because why? You're willing to lose $10 if, let's say, the market goes in against you. So now, why do most people barcode trading? Why do they do that? Is because once you enter a trade, there are sometimes the market retraces. Now, if you enter a trade and you use all your your risk in one trade. Let's say you enter the first trade and your first risk is already $10. That means that does not allow you to enter some more trades if the market was to retrace here somewhere there. Okay, so most people break it down, and if you don't know that they do that, now you know. Most people break it down. We don't just take a lot of trades anyhow. It is calculated. It's not like we just press that sell pattern till our souls are satisfied. If people do that, then they're just I don't want to call anyone a bad name, but they're doing the wrong thing. Okay, so one thing you need to understand is that everything in forex has to be calculated. That's how you minimize your risk, because if you open 20 trades and you're only willing to lose $10, if the market retraces in your favor, in against you, you end up losing a lot more than you intended. And that's what most people do. They over leverage, they increase lot sizes without understanding what they are risking. Because one thing that you have to understand is, don't enter into the market to say, I'm going to make $100 today. One thing you have to bear in mind is the same mentality that you have to say you're going to make $100 today is the same mentality you should have to say you can lose $100 today. So if you look at it from that perspective to say, I can lose $100 today, you have to be cautious to say, how do I prevent me from losing that much money? That's why you have to put your stop losses. You have to calculate how much you're risking. This is very important. That is how you become a successful forex traders. Because one thing you have to understand, it's not always that you're gonna be right. So if you enter the market thinking you're gonna be right, are you a holy grail? Like, do you control the direction of the market? If the answers are no to that, then definitely you have to prepare to say, if the market goes against me, what exactly am I doing to ensure that even if it goes against me, I don't lose too much money or money that I don't intend to? The reason why if you blow your account is because you want to. Okay, the first time, yes, it might be lack of knowledge. The second time, it might be because maybe you're just I don't know, you didn't learn the first one. But the third one and the fourth and the fifth, come on, you gotta realize to say, okay, this is enough. There's somewhere where I'm getting things wrong. Okay, so now after you've understood to say, I have a 1-to-1 risk to reward out of this trade, then now you can take your 1:3. That means you're risking $10 to make $30. Okay, why that is important is if, for example, you take 5 trades a day, 1, 2, 3, 4, 5 trades a day, you lose 3, you've won 2. Okay, so out of this you have if you are risking $10 to make 30, that's 30, that's 60. Okay, so now minus the 3 that you lost, that's 30. That means for that particular day you're still up by $30. You understand? This is vital information. Write this stuff down. Take notes. Okay, because most people won't teach you this. They won't. So you have to understand how much you're risking. Don't get into forex thinking you're gonna be the next millionaire in a month or 2. It is possible. We're not denying the fact. It is possible. All the money that you've lost in all these months or years you've been trading, you can gain it in one day in forex. But it's not an overnight success. You really need patience in this game. You really need to be very strict with your money. Okay? Because the market doesn't care about your problems. It doesn't care that you're in debt. It doesn't care that you have used your last money. It does not care that you've used your rent money to fund. It will blow it will blow your account and you will remain there crying. So how do you avoid that? Don't feel lazy to calculate this thing. It's your money, because if I was to ask you, if you had $100 in your hands, would you tear it up piece by piece and just start throwing it in the street? The answer is no, definitely. You wouldn't do that. So why are you treating trading different? The mentality of going into the market to say, I'm gonna make $1 million today. I'm gonna make how much today? You have to think about it to say, okay, yes, I want to make 100 today, but there is a possibility I could lose 100 today. So now your mind starts telling you, how am I gonna prevent me from losing 100 today? That's where risk management comes in place. If you put a stop loss and the market is rushing against your stop loss, don't feel tempted to start moving your stop loss to say, maybe I didn't mark my zone right. Maybe my stop loss is too tight. I need to move it up here. And the market keeps following it. Now you're like, no. Maybe my stop loss is too low. You now put it here till your account blows. You have to accept the fact that sometimes you will be wrong. You will analyze correctly, but the market just does what it wants to do. And never rush into entering a trade. You have to wait for confirmation first, because rushing, you will definitely crash in this game. That's how you survive long-term trading, man. Like, that's how you survive. Trading is really easy. The market moves up and down, 2 directions only. Now your job as a trader is to determine which direction that is, how you can take it, capitalize on that, and how you can minimize your losses. You will have losses. That's just a fact. We all have losses. Nobody trades like 24/7 the whole year without a loss. That's not possible. We don't control the market. We just participate in it. So as you're participating, make sure you don't jump in front of a train, but you tag along with the train and ride it through the entire journey. So yeah, that's the knowledge I could share today. Please take care of your accounts. If you're tired of blowing accounts, man, we have a mentorship program that can help you to just understand market structure, understand everything. The knowledge, man, invest in your knowledge. Sometimes it's not about being able to do it alone. Sometimes you need somebody who understands what they are doing for you to get ahead in life. Okay. Granted, you can learn everything on YouTube. Most of the things are there, but sometimes too much of information is poison, and you will grasp the wrong knowledge at the end of the day. So make sure you invest in yourself. In the long run, it will pay you. Don't feel greedy with the money. Just invest in a little bit of knowledge, guys. Okay, trading is easy when you know what you're doing. But otherwise, if you don't, you keep on crying every day. You blow your account. Every month end you fund, you blow. Every month end you fund, you blow. Every month end you fund, you blow. Because why? I think 3 times is a maximum you can blow your account. The 3rd time, it's either reevaluate yourself or just look for a mentor to train you so that you can understand the market. Otherwise, if you keep on doing the same stuff over and over again, it's like jumping off a building and expecting the different results. You gotta change your approach. Look at things a bit different. Okay. Don't let these people lie to you, man. Don't let these people that you see, mother of small accounts, father of small accounts, just make sure you understand what they do first, because a picture does not tell you the whole story, okay, of how exactly that person is trading. Okay, you will see a picture, you see a number, $21, holding balance 10,000. It is possible. No one is denying the fact. It is possible. But understanding what they did, how many days they waited for their high probability trade to happen, or how many losses they've taken before they get that one win, that's what you don't understand. Now you start comparing yourself to the person that has been trading for a long time, and you're just there taking trades anyhow, taking 5-6 trades because you've seen them do it. You don't understand what they're doing. You don't know where they're coming from. You don't know how they took their trades. You don't know where exactly what their confluences they're using to take that trade. Okay, so learn from them first. You can't just see a picture on YouTube and say, okay, I'm gonna try it on my $10. That's your last $10, and you wanna take that type of risk, man. This market will take your money if you're not careful. So yeah, that's all I can say, guys. I've talked too much. I sound like an uncle now. But yeah, leave a like, leave a comment, subscribe to the channel if you haven't. We're still pushing to 500. The one who wins, that will be announced in the video the day we reach 500. One will win a mentorship program for free. The other one will be given a system for free. So subscribe to the channel if you haven't. Yeah, let's get this money. It's your friendly neighborhood millionaire with Z Source Forex.